This is Greg Vincent with Top Producer, talking to Chip Flory, the editor for Pro Farmer Newsletter. And Chip, there's been a pretty massive sell-off here the last week or so, and actually it's heading into a couple months that we've seen some downward trends in commodities. People are really watching this report ahead on Friday that USDA is going to come out with. Right. What's the strategy you're advising your clients ahead of the report on Friday?
You know, number one thing to realize in these commodity markets right now is that the fundamentals are really having very little impact on price. The focus in the commodity world is on the financial crisis, on the credit crunch, whatever you want to call it. And as a result of that, we've just gotten into a liquidation phase in the grains that is pretty hard to stomach. So Friday's report, the chance that it's going to have a major impact on prices is really pretty low. We're going to have to see a big move in yields one way or the other for it to have much of an impact on price action. So when we talk about the dive that we've seen in these grain markets, the best strategy, I think, is to get your exposure on the 08 crop down to a level that you're comfortable with. On corn right now, we're advising that you don't have downside risk on any more than 10% of your corn crop, and on soybeans any more than 20% of your bean crop, and that feels a little heavy, really, when it comes to soybeans. But I think those are risk levels that we should be willing to accept at this point.
Now, maybe I should be talking to Dr. Phil about this instead of Chip. But as you look at the plummet that we've seen, and you said, I believe that it's hard to stomach, and it is. How does a farmer keep their head about them during this time, even if they do have a strategy in place?
You know, you just have to understand, first off, that what is happening is not fundamentally based. When we start looking at budgets for the 2009 year right now, guys are talking about current prices representing net losses of $100 an acre on corn and $150 an acre on soybeans. That obviously is not a situation where the market's giving us incentive to produce for the 2009 season, and that's going to have to change. We're going to have to see some incentive come back into the market, either by way of lower input costs or by better pricing opportunities on corn and soybeans. Once the liquidation phase shakes out, and once the markets start to refocus on traditional supply and demand factors, I think we will see some strength come back into these markets. But boy, I tell you what, picking a bottom in corn and soybeans right now is like catching a fallen knife. You better hope you catch it by the handle. And that's something that I don't advise anybody trying to do right now. Get your exposure down to a level that you're comfortable with. We're at 10% exposure on corn. Through a combination of cash sales made earlier this year and some put options that we bought as the financial meltdown was just getting started. On soybeans, same situation. We bought those put options as the meltdown was starting. I don't want to say that we bought put options with the expectations of the price declines that we've seen. We bought those strictly as price insurance, period, end of story. Nobody saw this washout coming in the grain markets, and so the put options are giving us some good returns right now, but it's way more than what we expected.
Speaking of washouts and catching knives by the handle, the credit market is the big story in the general financial community, and it really it impacted ag stocks last week on Wall Street big time. Yep. Concerns about credit, are those real in ag country?
You know, yes, they are real. There is reason to be concerned, but I think if you look at the big picture, which we will eventually do in all of the markets, but if you look at the big picture, farmers are still a pretty attractive target for lenders. We've got low debt loads, we've got high assets, we've got big revenue, we've got big expenses, which is, you know, a big borrowing requirement, and the ability to repay generally. The the ability to repay and to repay on time. So farmers are a pretty attractive target for lenders, and as a result of that, I think we're going to see some. We will have credit available in the farming industry for the 2009 inputs, and I think we'll be okay on that front.
So good advice right now is concentrate on harvest and just ride this thing out.
Exactly. Concentrate on harvest. Now, like I said, I think that we'll have credit available, but for the first time in a long time, we're recommending something that we generally wouldn't recommend, and that is to build up your cash reserves. Take some of the revenue from this 2008 crop, and let's put it in the bank and just hold on to it for a while. You know, cash is probably going to be a good thing to have for a while.
All right, Chip, thank you very much. That's Chip Flory, the editor of Pro Farmer. This is Greg Vincent with Top Producer.